How's it going, everyone? In this video, we are going to talk about consolidations, and this will be part 1 into a 5-part series on the phases of price and how they blend together. Let's hop into the PDF and get started. So what is a consolidation? A consolidation is when price remains internal to a high and a low. So what does that mean? It means by marking out a low and marking out a high, price remains inside that range, or not taking out the high, not taking out the low, for a period of time. So when does this generally occur? Well, we can expect it after a large range or when price hits a higher time frame level. So price moves from large ranges to small ranges. So following an expansion, we can get a consolidation, which can either be a continuation signature if we have hit a higher time frame level, such as over here, we expand into a higher time frame level and then have a consolidation. You can see prices remaining internal from a high and a low, so that is defining the consolidation. So how do we interact with a consolidation? Well, I don't want to trade within this range because that is where I'm going to try to guess if price is going to break lower or break higher, which generally I do not know. So I need to be patient and wait for price to manipulate or take out one side of this range. So if I am bullish, ideally I want to see price run out the low, so then I can look to trade it higher. And this is your classic power of 3 or accumulation, manipulation, and then distribution higher. Now in the bearish example, here you can see we remain internal to this high and to this low. Price then takes out the high. And so if my bias is bearish, I can then look to trade that lower. So you have your accumulation, manipulation, distribution. Now the only time we don't need price to run out the high or the low is if we have SMT. And that means the correlated asset does run out the consolidation lows. So we can treat it as if it did. So you can see here, let's say for example, this is NQ and ES did run out the low here. We have that SMT. I can treat this as a protected low once closed over because ES ran out the low, even though NQ didn't. And similar with the bearish scenario, price runs out the highs on a correlated asset, but not on this current one. I can use that SMT to anticipate this high remains as we trade lower. Now there are 2 types of consolidations that I will look to participate in, and that will be a continuation or a reversal. Let's first take a look at the continuation. You can see we have a large range or an expansion, which leads to a consolidation, a large range to a small range. Now with an open drawn liquidity or an objective sitting above this, I can anticipate price to continue as it has not hit a higher time frame level. So if we have a consolidation right here, and we have all these lows resting, what would I want to see? Well, I want to see that manipulation or price running out a low. You can see price runs into this low, giving us our manipulation. And then what can we wait for? Well, if you've seen my protected swings video, I can either look to get on side here, but a lot of times I prefer to wait for a continuation because what if we don't form a low here and we just trade lower? So I can wait for a continuation where we have a closure through this level, which gives us a change in the state of delivery, and then look for a continuation higher. Now the next would be a reversal, and this is just the opposite. You can see we have an expansion into a consolidation, so just the same as the last example. But what is the difference? We have hit a higher time frame objective or higher time frame level in which I'm anticipating a reversal to form. So with that, if I want to see a reversal, we have all these highs, want to see the highs ran out, a change in the state of delivery, and then I can look to trade this lower. Now, what type of PD array goes with consolidation? And that would be a discount and premium or the equilibrium. And how do I use this? Well, if price is consolidating, similar to my seek and destroy video, I can use the equilibrium of this range, where if price deviates from this range, I can look to trade back into the equilibrium. If price is going to continue to consolidate, it's just going to return back to that mean or that middle of that range. Let's get into TradingView and go over a few examples. So here we are in our first example. And what do we notice here? We have had expansion lower. We form a reversal. So we can mark out our change in the state of delivery here, which is a sweep. So reaching into an important level. Then the closure through the series of down close candles here. You can see we get an expansion back higher here. We have these 3 expansion candles. Now, what do we notice here? Do we have any confirmed price action? No, because if we're going to have an expansion, retracement, and then a continuation, price would have retraced into this fair value gap, which it did, but then it would have closed over this level. With a failure to do so, we are then consolidating. So we can go ahead and mark out this high and low. And what do we notice about these? Is price remaining internal to these? No, but it is failing to trade out of it, right? So it is still consolidating. I can then just readjust to that range high and that range low. You can see we're trading internal to that range. It's fairly obvious there. And so as we let this continue, if we are bullish, what do we want to see? Well, we've had our change in the state of delivery. We have an objective open. So we want to see that range low taken out. And here I could look to get on side with a fractal model. We have a candle 2 closure. So I could go down to a lower time frame or the 1 minute, or I can wait for that protected swing to form on this time frame, which would be a closure through the series of down close candles into that important level, which is that low there. Let's say if we get the closure over. We do, so now this low is protected here. I'd want to see price trade into this high, through this high, and then let's see if there's any other continuations. You can see we do get a new retracement. Now, is this going to be a protected low? Well, we want to see if we get a closure through this. Now, a quick lesson, we do not have a fair value gap or a low to be swept out in here, so no important level. That is when I can use 0.5 of this opposing candle here. You can see how price is respecting that there. So let's see if we get the closure over. We do. Now you want to see price continue higher here. So let's see. We do get that continuation. Now price reaches back into an important level. We have a series of down close candles. We do. Do we close over that? Not yet. We do now. And then I'd want to see this low be protected as we continue to trend higher. And we do so. So hopefully that makes sense in combining the protected swings with a consolidation. We have expansion or a large range leading into a smaller range, wait for that manipulation, then look to participate, right? Because that is when the trend is going to occur after that manipulation. So here we are in our next example, and let's take a look at a few things. You can see on our daily chart, we have taken out the high, we close back in, that's paired with a change in the state of delivery here, bearish. So I could be looking for a continuation lower this next day. Now, if we're expecting price to trade and go lower, we want to see what be respected, the EQ, right? So this is really where we would want to see the wick form if we're going to go trade to the previous day low. Now, what do we notice about the previous day low or these phases of price here? We have this expansion up of this whole range. You can see expansion, retracement, right? And what else do we notice? In the opposing viewpoint, we have a bullish change in the state of delivery. So there's a few conflicting things here. Let's let a few more candles play out. And what do we notice here? We are respecting the EQ of this change in the state of delivery, and we're expanding higher, not respecting this EQ. Now, if this EQ is going to fail, that means this swing point is going to fail, which can make it our draw on liquidity. So with that, let's see what happens here. This isn't telling us a whole lot. It is just consolidating. You can see how price is remaining internal or not taking out this high or low. So now what would we want to see? If we are bullish, we want to see a run of the lows to trade higher. And if we are bearish, we want to see a run of the highs to trade lower. So let's see what happens. Here you can see we run out the lows. Now, what could we wait for? We could look to get on side here, right? If we have a strong bias, which I don't, right? I don't have a great bias here. So I can then wait for a closure through the series of down close candles into this level, which then confirms the low, and then I can look to trade to this high. As we let this continue, we don't get the closure over yet, and there we do. And this would be a breakout signature as we are now closing over these highs. So what do we want to see at this high? Do we want to see price aggressively move back into the range? No, because then we're likely to trade lower. We want to see a retracement or just a continuation higher. Let's see what happens. And that is what you want to see, right? Either a consolidation or a retracement so we can have expansion and then a continuation. Let's see what happens here. Is this an opposing candle? It's not. It never reached into an important level. And what do we notice now? Now we are getting another consolidation. We're remaining internal to this high and to this low. And that's more prominent on a lower time frame, but we will just use this. And you can see now we have taken out this low, right, into a fair value gap, right? So we have that inducement. So if we are expecting a continuation to this high, what do we have? Consolidation, we sweep the low. If we're going to respect the EQ of this daily candle, we'd want to see a low form in here to trade higher, or we can wait for what? That confirmation of the closure over the down close candles. Here you can see we make a new low. We could use a different level for the change in the state of delivery or use the whole series. We react off that EQ and then close over here and expand, right? So taking a look at this and reviewing, what do we want to get from this, right? We want to see we have a consolidation here. We wait for the manipulation and then look to trade the expansion. Consolidation here, we wait for the manipulation, then look to trade the expansion, right? And that is why with my fractal model, I'm not looking to catch these lows in here, right? I'm waiting for the continuation entries. I'm letting a low form, trading the continuation. Letting a low form, trading the continuation. So just to review, consolidation, wait for the manipulation, trade the expansion. Consolidation, wait for the manipulation, trade the expansion. Let's get into our next example. So here we are in our next example, and taking a look at this daily chart, you can see price is bullish. What do we have? We have price sweeping out a low here, closing through the series of down close candles. So we have this important level. Price is expanding higher, coming back into the range. If I'm still bullish and I want to trade a reversal day, I'm going to be looking for relevant levels for price to reverse off of, which would be previous day's highs and lows. Let's drop into our hourly chart here. And if we are bullish, what do we want to see? Well, we would want to see a reversal. So this example, we're going to talk about a consolidation into a reversal instead of the continuations like the previous two examples. So taking a look, let's mark out our previous day's low, which is right here. And what do we notice? We have a high and a low that price has remained internal to, which is a consolidation. So letting this play forward, what do we want to see if we want to see a bullish reversal off previous day low? Well, we have a consolidation. We'd want to see a manipulation of that low and then to trade it higher, right? So let's see what happens. Here you can see we reach into that low and then we expand out. This is a nice reaction off previous day low. Now, what do we want to see? Well, when this low is confirmed by a closure through here, I then can anticipate this wick to be confirmed. We get a closure through this level. We do. So now I anticipate this low to hold or this wick to hold. Now, what do we know about expansion days? They have a small wick and a large body. We have a small wick. We are in London. So if we have a London reversal, we could anticipate what? A New York continuation higher. So let's see if there is any important levels that get formed. Here we have a fair value gap. Let's see if price reaches back into this level. It does. Do we form a swing out of this level? We do. So this would be a valid fractal model where I could look long, or I could wait for what? A continuation entry from this propulsion block, right? Or the continuation. In here, we do get that as we continue higher. Now, if you notice, we have a very bullish day. We're disrespecting the equilibrium, which means this swing is likely to fail. So that would be our drawn liquidity. So we'd want to see that go and be hit. So let's see what happens. Here we are consolidating, right towards the end of the day, and we are moving lower. Now we reach into an important level. If we're going to get a continuation from here, I'd want to see a closure through this level. Do we get that? Start to move higher. And no, we do not get that. So what do we notice about this? If we cannot get this, what does it mean? Price is remaining internal from these highs here and from these lows. So what would I want to see? Well, this would be now a continuation signature, right? Here's a consolidation that forms a reversal. Here's a consolidation where I want to see a manipulation of the low to continue higher. So as we let this play out, here we take the low out, and let's see if we can close over this level or get a continuation. And we're really struggling to get over that level. Let's see if we do. We do, so now I'd expect this low to remain intact as we trade towards these equal highs and ideally into this swing high. And there we do, expand higher. So this was a great example of a reversal off previous day low with a small wick, which allows for expansion, but most importantly, a consolidation, which forms a reversal, and then here's a consolidation that forms a continuation. So here we are in our last example for this video, and what do we notice? We have our daily chart here on USD JPY. It sweeps out the high, closes back in. Is that paired with a change in the state of delivery? It is. So I'm expecting price to trade lower this next day. So what do I notice as we go into this day? Price is pretty lethargic, right? It's just hanging around. So if we're taking a look, price hasn't traded below this low and price hasn't traded above this high. So we are just sitting in a range. You can see how many hours is this? 18 hours, we are in a range. And what do we notice? We are bearish and we run out a high. Do I need to catch this high to trade it lower? No. Could I anticipate a reversal? Yes, but I prefer to trade continuations so I can wait for that. Here you can see we have a nice reaction off of this high, not closing over, continuing lower. We create a fair value gap and we still have these equal lows here. Here now price reaches into that fair value gap. And what do we notice here? Into a fair value gap, closure through the up close candles, in this case 1, into that important level. And then I'd want to see price trade lower. So this is where I could look to take an entry on the open, put my stop there. Do I have 2R to that low? I don't. Can extend it a little for 2R. And let's see what happens. There we go, hit 2R as we get a continuation lower or expansion day. You can see the multiple other continuations that do exist in these areas. Now I hope you found this video helpful. This will be part 1 in the series on my phases of price. So we will then cover expansions, retracements, and reversals, and then blending them all together. But I hope you understand consolidations a little bit better now and how to go about participating in them, waiting for that manipulation to occur so you're not trying to trade within the range, getting stopped out, or anticipating that breakout. So as always, be patient. Hope you have a great rest of your day, and I'll see you guys next time. Have a good one.